Rocket Lab stock came public in August of 2021, and since then, as you can see, the shares are down 54%. They just reported earnings this week, and since then, the stock is actually up 20 to 25%. I own shares in my own portfolio. This is my position. It's an $11,354 position. Overall, I'm up $1,100 on it. I have 2,016 shares at about $5.08 per share. So I've put in $10,250. It's about a $2.24 billion market cap stock. And for those of you that don't know, it's an aerospace company that engages in the development of rocket launch and control systems for the space and defense industries. It operates through the launch services and space systems segments. The launch services segments provide launch services to customers on a dedicated mission or rideshare basis. So they're launching satellites into space for customers on their rockets. And then the space systems segment includes space engineering, program management, satellite components, spacecraft manufacturing, and mission operations. It was founded by Peter Beck in 2006, headquartered in Long Beach, California. They've currently got about 1,200 employees, and Peter Beck is still the CEO. So I love that founder CEO situation. The company just reported earnings. Here's the title right here from this article. Rocket Lab stock zooms over 20% on record revenue and narrower loss than expected. So after they reported, the stock was up 20.5% on Thursday. I mean, everything was up, but still, this was a very nice report. They reported Q3 results in line, and revenue was at its highest level ever. Q3 earnings per share narrowed to a 7-cent loss versus a 39-cent loss last year. They are getting a lot more efficient and closer to profitability, while revenue increased 1,092% year over year. It's kind of ridiculous. That just shows you how little the revenue was in the previous year, but still, they're at $63 million in revenue this quarter, which is a very respectable number, right? EBITDA loss was $6.9 million versus 18 in Q3 2021. So everything we're seeing is trending in the right direction with this company. However, they guided for Q4 revenue of 51 to 54 million, which really missed estimates. Launch services is projected to be 17 million and space systems is expected to be 34 to 37. Now, that's not as scary as it sounds. They get a lot of launch revenue. Sometimes those launches get pushed from one quarter to the next, and that is what management is saying has happened. They've just had delays. But the investment companies, investment banks don't like Rocket Lab. They reiterated, this is Credit Suisse, they reiterated their underperform rating. The thesis remaining focused on the neutron development risk, so they don't think their new large rocket, that's their large rocket, gonna land as well or sell as well as Rocket Lab thinks. Starship, which is actually SpaceX's large rocket, they think is just gonna dominate the market, basically. They call it reflexivity exposure and then relative valuation. That's all the things that Credit Suisse does not like it. And they have a $3 price target, which is 36% downside from the last close. Wells Fargo and Canaccord reduced price targets to $5.75, which has a 13.5% upside. It was previously $6.50. And then for Canaccord, so that was Wells Fargo. For Canaccord, they have it at a $15 price target, which I think is the highest one. 216% upside. They brought that down from 16. That was some of the analysts' reactions to their most recent quarter. What I want to dive into is some of the management commentary from their press release, as well as we're going to cover the investor presentation. And then I'm going to tell you whether I think the stock is a buy or sell. And obviously I think it's a buy because I own shares, but I'm going to paint some potential upside scenarios, as well as talk about some different situations that could happen. None of this is advice. It's just me sharing information and really my own thoughts in my own portfolio. Okay, so founder and CEO Peter Beck said, this quarter recorded historic achievements for Rocket Lab. We continued our small launch industry leading cadence of a successful mission every month in Q3, and following another successful launch early in Q4, we have now conducted 9 orbital missions in 2022, beating our previous annual launch record to this point. The development of the Large Neutron rocket was accelerated this quarter with the selection of the NASA Stennis Space Center as the site for Archimedes engine testing and development, eliminating the need to build a site from scratch and speeding up our development time to first launch. That's great news. Neutron hardware was also produced for the first time this quarter, including full-scale prototypes of the rocket's Archimedes engine and 7-meter diameter tank section. The space systems business is continuing. highlighted by single largest satellite separation system order in company history, 14 million. Since July 1st, the space solar business has also executed more than 50 contracts or modifications to existing contracts. Early in the fourth quarter, we have booked more than 13 million in new business, with the majority of those bookings generated by space systems. So let's jump into the investor presentation, just talk about some quick highlights. 3 successful launches in Q3, successful missions for repeat customers, the National Reconnaissance Office, and Synspective. Major milestones were achieved. 30th Electron launch, pretty awesome. 300th Rutherford engine in space, that's their engine. 150th satellite deployed. Customers pay to launch their satellites into space. Successful missions in Q3 maintain Rocket Lab's monthly Electron launch cadence since the end of Q1 2022. Okay, and this was a big deal. They had a successful hot fire of a pre-flown Rutherford engine. This is a big deal for reusability, which is going to increase their margins over time. They refurbished the first stage Rutherford engine from a previous recovery mission and successfully test fired it for the first time. 200 seconds of engine fire and multiple restarts with refurbished engine performing the same standard as a newly built one. Okay, and sometimes customers need to launch satellites fast because something bad happens. Rocket Lab has their responsive space program. They say sometimes satellites fail through accidental and deliberate actions. The ability to rapidly replace or establish new assets on orbit is crucial for government and commercial operators alike. Rocket Lab's new responsive space program enables this, ensuring space assets can be launched, reconstituted, and augmented on rapid timelines, delivering confidence and resilience to our customers. The way they do that is they actually have their own dedicated launch facility where they have way more launch windows than somebody who shares a NASA complex or something like that. So they're able to offer this responsive space capacity. Okay, basically still building these engines. They're on schedule to first test their new Archimedes engine. I don't even know if I'm saying that right, in 2023. Okay, and this is that big space systems contract they got. They're going to provide motorized light bands to Lockheed Martin and one other undisclosed customer for U.S. Department of Defense's next gen Trans 1 tracking layer constellation. That award represents 2/3 of separation systems required for that project, and it totals 14 million. Their motorized light bands are highly trusted with 100% mission success rate and highest technology readiness level by the U.S. government. Okay, more Lockheed Martin. They're going to supply solar power to Lockheed Martin for 3 large missile warning satellites for the U.S. Space Force. Their latest contract continues their long-standing Solero support for missile warning satellites for the U.S. Space Force. Okay, so these are important customers, national security missions, and a big deal, right? Okay, so those are just some of the highlights. Let's jump into the financials for the company, and this is what has me so excited. They're showing such an improvement in margin and on a path to profitability while revenue growth is still very strong, and there's just so much upside in the future if they continue to execute well. Okay, so we talked about the revenue growth here, right? They had 63.1 million in revenue, which was 14% quarter over quarter growth. But what's more impressive is that their gross margin actually improved, right? So it went from a 9% GAAP gross margin and 22% non-GAAP to 13% GAAP and 24% non-GAAP this quarter, right? So year over year, that's an awesome increase. And what happened is that space systems contributed more of the revenue, which is a higher margin business than launch services. And as they continue to scale, they're expected to continually improve gross margins, which is great for the long-term profitability of the company. Okay, something I do want to keep an eye on is their backlog. They have an ending backlog of 520 million, which actually decreased 10.8 million from the prior quarter, as they recognize record revenue in the quarter combined with some larger potential deals taking longer to close. That's what I talked about, some of the delays in these deals or launches. I just want to monitor that and make sure that we don't see a crazy drop in demand and backlog over the next couple quarters. So definitely something. Okay, and we did see operating expenses increase a little bit. That's okay because they still have strong revenue growth. It's going to be expensive to continually invest in the business. We do want to see this get under control, and we definitely want to see revenue growing faster than operating expenses, right? All right, so they ended Q3 with $515 million in cash equivalents, restricted cash, and marketable securities, which was a decline of 31.2 million. As of right now, they have plenty of cash on the balance sheet, but they are investing heavily, and we need to see them continue on their path to profitability and continue to have strong revenue growth. Otherwise, they're going to get in a situation where they've got to either issue more sales, raise debt, do something to raise cash on the balance sheet. They're not there right now, and they say they can fund all of their investments with the cash on the balance sheet. But it's something to keep in mind with a company that's not profitable. Is something we want to monitor from quarter to quarter. Rocket Lab is a very risky investment. It's any money that's invested in a stock like Rocket Lab, you should be prepared for that to go up and down, or down by 50% or more or whatever. It's just going to be a very volatile stock. And again, these are just my thoughts, not advice or recommendations, and I'm not a financial advisor. But what I've done is I've built a little scenario here using analyst expectations for revenue growth, right? Analysts are expecting 51% in 2022, 41% in 23, 48% in 24, and then I've put in 20% for the next 3 years, right? It is currently trading at a blended price sales ratio of 12.42. That's a metric in how people can measure a stock multiple. So what I've done, and we've got to have a long-term view on this stock or a long-term outlook and just be ready for the ups and downs, right? If it trades at a price to sales ratio of 8 in 2027 and they hit these growth numbers, then you're looking at a potential total return of 146%, up 19% annually. If they're only trading at a price sales ratio of 4 and they hit these growth numbers, then you're still looking at a 23% total return, which isn't good for 4% annualized, but you're not losing money in that situation. Now, what if these last 3 years, 25, 26, and 27, are at an average of 30% growth, not 20%, which I think is possible. At a price sales ratio of 8, then you're looking at 213% total return. Price sales ratio of 4, which is down significantly from 12.42 right now, you're looking at 56% total return. Maybe the space industry does very well and they beat expectations and revenue stays in the 40% range. Okay, this is like, to me, absolute best case scenario that I wouldn't expect to happen, but hey, it's possible. Then at a price sales ratio of 8 in 2027, you're looking at a stock price of $20, total return of 291% for an annualized return of 30%. That would be incredible. Even at a price sales ratio of 4 at that point, you're looking at a 95% total return for 14% annualized, okay? So that's my plan. I'm gonna continue to hold my shares of Rocket Lab. I'm gonna keep it a position that I'm comfortable with the volatility, which is gonna come. It is a risky stock. I'd love to know your thoughts in the comments, if you agree or disagree, if you have other stocks you think I should look at, and if this is helpful to you, I would really appreciate a like on the video and a subscription to the channel. It's free for you, and that really helps more people find the channel and helps me grow the channel. Thanks, and have a great weekend.